Okay, and welcome back, students who are taking Math for Business and Finance and Math applications. And this set of videos are going to be the Chapter 16 Summary Practice Test problems. And before we get started, when I was looking at these problems, especially like number one, and we'll get to that in just a second, it caused me to think that, well, I didn't, when we were doing the theory videos, I didn't cover everything in the chapter, okay? And the purpose behind doing the theory videos is not to cover everything in the chapter, okay? Um, you know, I don't need to rewrite or reread, what's in the book. I mean, that's up to you. In the theory videos, I covered, the formatting of the income statement, balance sheet, talked about vertical analysis, horizontal analysis, trend analysis, went over, some of those ratios, but, I didn't cover, things like figuring out your cost of goods sold. Okay. I mean, so just if you, if you're at a point here where all you're doing is just watching the videos, okay, and thinking that whatever was in the videos is all that you have to study instead of actually reading the textbook, be sure to go back and read the textbook, because I realize I'm in chapter 16, and you may or may not have figured out along the way that I haven't, in the theory videos, I haven't covered all of everything that's actually in the textbook. Okay, I've covered things that are important and that students seem to have a difficult time with, but I've left some things out. And as we do problem number one, this is one of those areas where, no, I didn't cover this information in the theory videos. So go back and read the textbook, because the videos are not, they're a supplement to the textbook. Okay, they're not a replacement for what's in the textbook. Okay. All right, so let's move on and start doing the summary practice test. Okay. So it says here, we're being given information, okay? And I'm not going to repeat the information, but this is given. This is our data that we're going to work with, and we're being told to calculate these four items right here. Now, you can, in figuring out things like net sales or cost of merchandise sold or cost of goods sold, I have more of a tendency to use cost of goods sold, COGS, for those who move on. And when you'll see that in financial accounting and managerial accounting, it's more referred to as cost of goods sold. Gross profit from sales and net income, right? Your balance sheet and your income statement do not necessarily present all the information that you need to know to be able to figure out what, how to calculate these items. Okay. You will be given information. All right. You'll be given all of the information, or you'll have to, figure out certain things in order to be able to make those calculations. All right. But all of the data will be presented, and that's, when we're talking about working word problems, remember, direct information has nothing to do, and then manipulated, needs to be changed. This is a big one, okay? When you're given data, okay, in order to be able to try to calculate this stuff, oftentimes you'll have to manipulate some of this data in order to get the information that you need to calculate what you need to calculate, okay? So, and I'm not going to, I don't have income statements and balance sheets to go back and look at in order to say, oh, here's where this number comes from, here's where that number comes from, okay? It's, you're being given the data, you're not given a complete set of information. You're only given the information that you need in order to be able to figure these things out. So with that said, we'll start out here with net sales. Now, when we're talking about net sales, the operative word here is net. Net meaning the sum of, a bunch of figures, and it ends up being a total amount. So when we're talking about net sales, we usually start out with gross sales, I mean that's how much was actually sold, but we have to take into consideration that we have returns and allowances, sales returns and allowances, meaning, if somebody buys something today, well, that's a gross sale, but tomorrow they might return it. Okay, or maybe, today somebody comes to me and buys something, well, that's a gross sale, but they might say, well, this here is broken, can you give me some off? And you might say, okay, I'll give you that much off. Well, that's an allowance. Okay, so that's a negative number. We're going to subtract out our returns and allowances. And also you have to take out things like sales discounts, right? Maybe, the item is 20% off today. Well, that's a discount, right? So the total of your gross sales, less what's being returned and allowance, and the discount gives you your net sales, okay? Why would we, the thought occurred to me, why would we bother with looking at all of this information and storing it and recording it that way? Because it allows us to do better analysis, okay? Think about it, and I like using the example of a car. Let's say you work in a car dealership and you're a salesman, okay? And if you sell 10 cars, you get a bonus, okay? And let's say that bonus is $2,000, right? And let's say for this month, you happen to, it's like it's 2 days before the end of the month and you have 9 sales, right? And you only need one more in order to get the bonus, okay? Well, you're not sure you're going to make that sale. And an unscrupulous salesperson might go to his buddy and say, "Hey, look it, I need one more sale in order to be able to get this bonus. Why don't you come in tomorrow and you buy the car, okay? And then I'll have my 10 sales, and that means I'm going to get my $2,000 bonus. But here's the thing: I know you don't want the car, but why don't you come back next week in the next month and return the car, okay? And if you return the car, right, you're not going to own the car and you don't have to worry about it anymore. But for all of your time and trouble for buying the car and returning it, I'll split this $2,000 with you, 50-50, okay? And it's like, oh yeah, this is a great idea. Well, if all you did was, and I'm going to write this up here, in this month, okay, there's going to be gross sales of, I don't know, let's just pick a number, say $350,000, okay? And that includes your 10 sales, okay? But next month, at the end of the month, let's say the gross sales were, I don't know, 420,000, okay? And let's say the car that your buddy bought was a $50,000 car, okay? Well, that 50,000 is all part of this 420,000, right? And maybe the selling of this 420,000. I'm just going to guess here and just pick a number. Let's say, actually, I should use much larger numbers. Let's say 4,200,000. Okay, or yeah, no. Let's get a decent number here. 50 times, let's see, 10, 50, 500,000. Let's say 3 salespeople. Okay, let's say 1.5 million. Okay, and let's say this month it was 1.25 million. Okay, if all he did was just record gross sales, okay, I wouldn't see, that return and allowance in there, okay, because I'm just looking at one set number here, okay. But if I have a category of returns and allowances, well, then I might see that, oh, there was a $50,000 return, so my gross sales would be $0.5 million less the $50,000. And because I recorded it that way, now I can go and say, okay, well, why did I have a return? Well, who was it for? Oh, it was for, this salesperson over here who had made 10 sales and got this additional bonus. Well, if it was returned and he only had, 9 sales to begin with, plus this one that's returned, well, we gave him $2,000 that he didn't deserve. So we can take the $2,000 back. But if we don't record all of this information, I'd never see that, and I would have lost out on $2,000. Okay, so that's why you record this information as we're looking at it, because this way you're able to, the better you can track the information, the easier it is for you to be able to analyze it and then take the appropriate actions. Okay. So with our gross sales here, we have $170,000, and our returns and allowances are $9,000, and our discount, we don't have any discounts, so we end up with $161,000 as our net sales. Okay, and that's all there is to that, $161,000. Now I realize that was a long explanation, but it's to give you an idea as to why we're doing what we're doing. Okay, it's never enough to just know a formula and plug things in mathematically. Okay, you need to understand the underlying concepts, because in case you have deviations, like in this case here, I had no discount. All right, and you might wonder why I didn't have any discounts, especially if I had 20% off or a buy one get one free. Well, somebody's not recording the information correctly because I don't have any discounts. Right? It's, yeah, I could have just quickly plugged in numbers, but when you understand the underlying concepts, it's much, much better. Okay. All right. Let's see here. Gross profit, cost of goods sold. Okay. Well, for cost of goods sold, we need to consider our inventory. Okay. I mean, well, this is going to take some time here to explain this. So I'm going to stop here, and I'm going to pick up with the same problem in the next video, and we'll discuss cost of merchandise sold or cost of goods sold.